Happy Tuesday, everybody. Welcome to another episode of China Update, where we discuss leading political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. We have a few quick but important developments to cover, so let's jump in. And first up, we begin with the Chinese economy, and specifically the stock market. A major Chinese equity gauge briefly crossed a key psychological threshold on Tuesday, today, a sign of cautiously improving mood among investors as Beijing and Washington edge toward greater trade stability, but also a reminder that despite China's strong stock performance this year, it's still down from where it was over 10 years ago. The Shanghai Composite Index climbed as much as 0.1% to 4,000.86 points, its first move above the 4,000 line since August 2015. The modest rise followed a string of trade-related agreements between China and the United States, covering tariffs, shipping fees, and export controls, which we covered in yesterday's video, and are reportedly set to be confirmed this Thursday when the two nations' leaders meet, signaling tentative progress in easing years of economic friction between the two powers. While the index quickly paired gains, the breach serves as a symbolic moment for Chinese markets that have long languished in the 3,000 to 4,000 range. It reflects a broader sense of optimism propelled by diplomatic thawing and the ongoing AI boom that has boosted shares in technology and semiconductor firms this year. Still, analysts caution that the rally's staying power remains uncertain. Despite headline gains, the broader economy has shown muted recovery signals, with consumption and property investment still lagging. Many investors remain wary that the recent trade detente could prove fragile. Regular viewers of China Update would certainly understand why, lending some to lock in profits after the index's psychological milestone. For China's legions of retail traders, the 4,000 mark has become something of a running joke, a ceiling that the market approaches only with official support or intervention. Over the past decade, each rally above 3,000 points has been greeted with a mix of relief and skepticism, reflecting the tension between policy optimism and structural economic headwinds. The latest breakout, however fleeting, is likely to reignite debate over whether China's stock market can sustain momentum without stronger domestic growth. With most trading over the past 10 years confined to the 3,000 to 4,000 corridor, breaching that upper band could prompt a reassessment of risk and valuation, especially as some investors fear the AI-fueled surge may be overheating. For now, the crossing of 4,000 points, even if brief, stands as a symbolic victory for Chinese equities, highlighting renewed confidence amid global uncertainty. But it's unclear whether this victory will be lasting or not, and it also serves as a reminder that despite what we have seen this year in Chinese equities, the market is still down from where it was 10 years ago, a painful state of affairs for households who had assets in stocks and, of course, property, which has also lost between 15 and 20 trillion US dollars in value since its peak in 2021. Next up, China and the Association of Southeast Asian Nations, ASEAN, signed an upgraded version of their free trade agreement on Tuesday, today, deepening economic ties between Beijing and its largest trade partner. The new so-called 3.0 Pact, finalized at the ASEAN meeting in Malaysia, expands cooperation into emerging sectors such as the digital and green economies, as well as agriculture and pharmaceuticals. Bilateral trade between China and the 11-member ASEAN bloc reached 771 billion US dollars in 2024, showing the region's importance to Beijing as it faces escalating tariffs from the United States. The agreement, which follows nearly 2 years of negotiations that began in late 2022, is seen as part of China's effort to portray itself as an open, collaborative economic partner, even as it faces criticism over its export controls on critical minerals, not to mention its massive industrial policy. This also comes as the United States inks several of its own trade agreements with key Southeast Asian players like Vietnam and Malaysia, which we covered in yesterday's episode of my other channel, Market Update. For those who haven't seen Market Update, it's similar to China Update, but we cover major economic and financial developments in the world's most important markets through a balanced and grounded digest. I put a link to today's episode in the description below, so if you're interested in checking it out, maybe give that a click after today's episode. The United States has been pushing hard to gain strategic ground in East Asia, with these deals focused on trade, supply chains, and minerals. They also focus on preventing the Chinese from transshipping their goods to the United States markets in order to bypass US tariffs on China. Beijing is thus scrambling to finalize better trade conditions with some of these key players in Southeast Asia. Both sides are already members of the Regional Cooperation Economic Partnership, RCEP, the world's largest trade bloc, covering around 30% of global GDP, and say the strengthening China-ASEAN pact could help cushion the region from US trade pressures while promoting greater regional integration and high-growth, technology-driven industries. Next up, we have two more developments to cover, but just quickly, if you're getting some value from today's episode, don't forget to hit the like button. If you are part of the 45% of regular viewers who are not subscribed, clicking that subscribe button is also a huge help for the channel. This is just a couple of clicks of the mouse, but it's a big help for me and for YouTube promoting this channel to new people. Patreon and Buy Me a Coffee links are also in the description for those who want to help keep China Update financially sustainable. I rely on your support to keep going, and so this is also a tremendous help. Next up, China has cemented its leadership in the global battery power market, now producing over 60% of the world's power batteries and around 70% of its battery materials, according to official data published this week. This dominance underpins the rapid expansion of the nation's new energy vehicle, or EV, sector, which has become a cornerstone of China's industrial transformation. Power battery output has soared more than tenfold in just 4 years, from 83.4 gigawatt hours in 2020 to over 1,000 gigawatt hours in 2024. This is according to Yao Zhanzhi, Deputy Director of the Ministry of Industry and Information Technology's Equipment Industry Development Center. Growth remained robust in the first 9 months of 2025, with installed capacity jumping 43% year-on-year to 493.9 gigawatt hours, while exports climbed 33% to above 130. Chinese battery makers are deepening their global footprint, investing in factories and R&D centers across Europe, Southeast Asia, and Africa. Their momentum has been further fueled by the 2025 World Power Battery Conference in Yibin, Sichuan, a key production hub that alone accounted for 16% of China's output last year. Since 2022, the conference has driven nearly 300 billion yuan, $42 billion in projects, underscoring China's accelerating charge towards global energy leadership. Of course, the flip side to all of this success continues to be massive overcapacity, smashing profit margins for China's producers and exacerbating existing debt problems. Still, this trend shows that China's industrial policy is bearing fruit, and its strategy to dominate key advanced technologies marches on, even if it comes at a very high price. And on this theme, the European Union has been jolted by China's decision to expand export controls on rare earth minerals, a move that has seen shockwaves through industry and government circles across the bloc. While the United States secured a temporary reprieve through direct talks with Beijing, which we covered in yesterday's video and which will be following this week, the EU was left out of that arrangement, prompting urgent diplomatic outreach. A high-level Chinese technical delegation is due in Brussels this week to discuss the export restrictions following preparatory talks on yesterday. The visit is a clear sign of growing concerns in Europe over supply disruptions to critical industries, from electric vehicles to advanced electronics, given China's near monopoly over global rare earth refining capacity. Even though the world is moving quickly to reverse this monopoly, this will take some time. And so in the short term, China has heightened leverage over the Europeans. The European Commission is now working on a comprehensive contingency plan to mitigate the fallout. Measures under consideration include accelerating domestic mining and refining projects, expanding recycling capabilities, diversifying imports from alternative sources such as Australia and Canada, and establishing a joint purchasing and strategic stockpiling center. These steps, officials say, are aimed at reducing dependence on Chinese exports in both the short and long term. Amid the tensions, European and Chinese negotiators have also discussed allowing temporary exports of Nexperia chips produced by a Chinese-owned Dutch subsidiary to prevent potential shutdowns in Europe's auto manufacturing sector. Such a compromise could help stabilize production lines while broader trade terms are renegotiated. The rare earth dispute comes at a delicate moment for EU-China relations. The German foreign minister recently cancelled his first planned visit to Beijing after disagreements over meeting arrangements, though both Berlin and Beijing have sought to downplay the incident. European Commission President Ursula von der Leyen struck a tougher tone over the weekend too, warning that the EU is prepared to, quote, use all instruments in our toolbox, end quote, to respond if talks fail. Speaking at the Berlin Global Dialogue Conference, she announced a new strategy focused on recycling, joint procurement, stockpiling, and targeted investments. Quote, we are ready to act decisively, end quote, von der Leyen said, signaling that the EU's patience is wearing thin as the bloc braces for a prolonged standoff with Beijing over access to the critical materials that powers its green and digital ambitions. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Tuesday. Now, there likely will not be an episode tomorrow unless something big happens, so I hope to see you for the next video either tomorrow or more likely on Thursday.